session of the ACA Small Business Bootcamp and Resource Collective. We got a lot of attendees today, so we're going to let the attendees roll in and join. So give us a few minutes and then we'll get started. Just waiting for all the participants. Okay, good morning, everybody. Thank you for joining us this Monday morning, June 15th, for the ACA Small Business Bootcamp and Resource Collective. We're excited to have you here today to participate with us, and we've got a great session planned surrounding PPP and the updates and some question and answer that we'll go through. So first, I want to thank our community partners that have helped provide our content and resources for the bootcamp and the Resource Collective. The Small Business Bootcamp and Resource Collective is designed to help small businesses emerge through the COVID crisis stronger than ever. It's a statewide initiative supported by our community partners, and it's daily, running through the end of June. We've been doing it since the beginning of May with some great content. All the content that we've gone through is available on our website. The prior sessions are recorded, and this session will be recorded so you can go back and review it as well. So this week's topics, we've got updates on PPP loan forgiveness. We've got global lessons learned from Starbucks. That's tomorrow. That's going to be interesting, as Starbucks does operate in China, and they've been able to return back to work a few months ahead of us here. So we're going to get some great insight on what they did to return stronger through their global market. Wednesday is how to successfully transfer your ownership of your business. Thursday is restaurant operations and the new normal. And then Friday is our marketing to return stronger session. So some quick updates on PPP. As of June 12th, the SBA sent out some updates on their funding. So as of June 12th, there was approximately $129 billion remaining in the PPP pool. Some additional updates is over 76,000 Arizona small businesses have received PPP loans, and the total dollar amount is still about $8.5 billion, real close to that. One of the things is the average loan size has gone down, if you noticed that. And that just shows that more real small businesses are getting the PPP loans to help them through this time. When combined with the EIDL loans and EIDL Advance, Arizona has received over $9.5 billion in funding. So just a reminder, some of the ACA programs that we have to help businesses out there. We have our small business services. We can help you navigate through the SBA and work with the SBDCs, the Small Business Development Centers. Our workforce division has some really good programs for both employers and employees. And then our Arizona MEP is for all you manufacturers out there. It's the Manufacturing Extension Partnership. And they're one of the top programs in the nation, and they're to help your manufacturing operations be as successful as possible. So we have a reminder to visit the Arizona Together state website on everything COVID-19, on information and resources. And we have this guides and resources page that we've added to our website, or in the process of adding, that's got the different guides that are available for your business, whether you're a retailer, grocery, salon, construction. There are various different guides to help you return your business, to reopen your business, and help your employees stay safe and grow your business. So great resources there. Another great resource for your business is the ACA's Arizona Business Resource page, azcommerce.com/COVID-19, to help navigate the COVID-19 pandemic. So today's speakers, we're excited. We have Kristen French from Upworth and Carrie Ann Todd from Beach Fleischman. Both are experts for their organizations on the PPP loans and forgiveness. And they work closely with their clients on these topics every day, day in and day out. And so we're real excited to have them sharing their expertise on the updates and help with the question and answers that you have. So regarding question and answers, there's a Q&A button on your screen. Please utilize that for the questions. And we will get to those and work through them throughout the webinar. So I'm going to go ahead and stop sharing my screen and turn the screen over to Carrie Ann. And she's got a few slides she's going to go through before we jump into the Q&A.
Okay. Are we good?
We are.
All right. So good morning, everyone. 9 a.m. on a Monday. That's pretty committed for you to attend a webinar that early. I'd like to say we have a lot of great new guidance that was released on Friday, but unfortunately, the SBA hasn't quite come through with that. So what I want to do is go through a few slides that kind of gives you an update as to what happened with the PPP Flexibility Act that was passed on June 5th. And then tell you a little bit about what happened last week after Congress passed that legislation. And then we'll roll kind of into a Q&A where you can ask just about any question you might have. And Kristen and I will do our best to help you with the amount of answers that are out there right now. This is kind of just a disclaimer, just reminding you that this is as of what we know today, which a lot of times when I speak is not that big a deal, but dates really matter these days because things are changing so quickly. I was really hoping that last week the SBA would give us the guidance we're looking for this new 24-week period that we all get, but that didn't happen. So maybe this week, this will be the week that we all kind of get the answers and get a little more insight into how this new system is going to work. Okay, so the PPP Flexibility Act that was passed on the week before June 5th and was signed by the president on June 5th. And this was bipartisan legislation, probably one of the few laws that's ever come out of the House and then signed by the Senate without any changes. The Senate recognized they didn't really like necessarily everything that was in the House bill, but they decided that timing was of the essence and they could live with what was in there. So some of the changes from the PPP Flexibility Act are new loans are 24 weeks in terms of the covered period, meaning you have 24 weeks from the date that your loan proceeds are dispersed into your account to utilize the money as required by the PPP program. If you have an existing loan, meaning you got funded before June 5th, then you can choose either the original 8-week covered period, which has a couple different interpretations, or you can choose the new 24-week period. The logistics of how all that's going to work out is kind of what we're waiting for. As you know, there are a lot of computations required for the 8 weeks that have to do with FTEs and reduction of wages rules. And if you want more information on that, you can kind of scroll back to the last presentation that I helped Robert with. There was a panel of about 5 of us, and we went through more details on the slides on how all those different restrictions work. So flip back to that. So I'm kind of waiting to see when the new SBA application comes out, because they have to have a new application that helps you work through the 24 weeks, how they're going to transition, and if the same rules will apply, if they'll modify the rules, how all that's going to work. The other thing they did in the Flexibility Act was reduce the threshold for payroll costs. So previously, you had to spend at least 75% on the proceeds on payroll, or your forgiveness could be reduced. And that has been changed now to 60. And so I think a lot of industries that are going to benefit from that are probably hospitality, another industry, maybe retail, where they haven't quite opened yet, but they've still been paying their rent and they've still been paying their utilities and other fixed costs. So one thing that was clarified last week is that's not a cliff. And I'll have a slide on that. We'll talk about that a little more later. There's a new safe harbor for FTEs. I'm not sure exactly how that's going to work, but I can talk about that a little bit more. Maturity on new loans is 5 years. So if you get a loan, PPP loan, June 5th or after, any portion that is not forgiven and ends up being a loan is going to have a 5-year maturity. Existing loans are still 2. So that's kind of interesting. They did say you could try to negotiate with your lender if you needed more than 2 years to repay any portion that ends up being a loan. But Mnuchin has been really insistent in that the modifications from the Flexibility Act are going to make it so much more easy to get forgiveness that he doesn't anticipate very many people will even end up with a loan. Some people obviously will, but he's expecting these provisions to help more people end up without a loan. And then the last thing that came out of the Flexibility Act is something that was in the CARES Act originally. And under the CARES Act, you could defer the employer portion of FICA. That's the 6.2% payroll tax. So just the employer portion. So you have to keep paying the employee portion. You have to keep paying the Medicare portion. But you could kind of carve out the employer portion of FICA and not pay that right now. And prior to the Flexibility Act, anyone who got a PPP loan, as soon as they got their forgiveness decision, they could no longer defer their employer portion. So what the Flexibility Act says is, no, even if you get a PPP loan, you can take advantage of this just like everyone else. So the way that works is you can defer payment of your employer portion of FICA through 12/31 of 20, and then you have to pay 50% of it by December 31st of 2021, and the other 50% of it by December 31st of 2022. So those are kind of the major provisions of the Flexibility Act. Last week, so the president signed it on Friday, June 5th, and then on Monday, June 8th, Secretary Mnuchin and the SBA director, Jovia Carrazzo, I think is her last name. Anyway, they issued a press release. And in this press release, he kind of went through a few things, and one of them was talking about how the 60% is not a cliff. Because if you read the Flexibility Act, it kind of infers that the 60% is a cliff, meaning if you don't spend 60, you don't get any forgiveness. So he kind of clarified that. And then on Wednesday, those two also testified before the Senate Small Business Committee. And you can find this on YouTube if you have 2.5 hours to kill. And the first question Secretary Mnuchin was asked was, now this is not a cliff, right? Please clarify the 60% is not a cliff. So that was the first question he answered. He said, no, it's not a cliff. You can still get partial forgiveness. So he once again had to clarify that. And then the second thing he said at the end was that borrowers would be able to apply for forgiveness as soon as the money is spent. They will not have to wait until the 24 weeks is over, which is interesting, right? Because under the 8-week system, you definitely had to wait till the end of the 8 weeks was over to apply, partly because it would take you that long to use all the money. And secondly, it didn't really matter because the banks weren't ready to accept your forgiveness applications anyway. So he was pretty clear about that. And he said, what will happen is we expect most businesses to start applying and most of the forgiveness applications to come in over the course of the end of the summer. Which would be a big help to everyone, right? Instead of all these people waiting to 24 weeks and filing their forgiveness applications, and then it would be just like the application debacle where we had hundreds of businesses applying for forgiveness and trying to process them was a mess. This will hopefully streamline the process because applications will be coming in over time as opposed to everyone hitting them in the November, December, January timeframe. He also indicated that there's this new safe harbor for FTEs is going to reduce paperwork and increase forgiveness. So he didn't really say how that's going to work and how they're going to interpret that. 30,000 foot level, it kind of basically says if you're unable to get your employees to come back to work for you and you're unable to hire qualified people to replace them, the FTE formula won't count against you. Or if you're able to demonstrate that COVID had a negative impact on your business, they won't count that against you either. But it's not defined as how you're going to have to demonstrate that COVID affected you. Is it going to be an employee test? Is it going to be a revenue test? Is it going to be some other test? So we're going to have to wait for that SBA application to come out to understand how this safe harbor will be implemented and how what the businesses are going to have to do to be able to get the safe harbor. So until that application comes out, we can only guess. And I've decided to quit guessing and I'm just going to wait because we do have time. So we'll just wait on that. So even under the new system, you have to determine your covered period. So going forward, you kind of have 3 choices. You can stick with the 8-week system. And under the 8-week system currently, there's the regular covered period, right? 56 days starting with your receipt of proceeds. There's this alternative payroll covered period, which we've covered before. And that kind of shifts out a little bit and begins on the first day of the first pay period following the PPP loan disbursement date. And it's also 56 days long. And that gives you a little bit more flexibility if you're going to stick with the 8-week program, but maybe you weren't able to gear up your employees as quickly as, you know, because sometimes you got your loan, you didn't even realize it, right? They said you'll get your funding in the next 10 days, and the next thing you know, it's in your bank account, and you haven't called your employees back to work, or you're not quite open yet. So that APCP gave you some flexibility. And then there's the 24 weeks, which is new, 168 days, starting with the receipt of the loan proceeds again. But also note that your covered period can't go beyond 12/31/20. So anyone who gets their PPP loan in the next couple weeks, or even on into July. So you can apply through June 30th. So we've got about 16 days left. And I'm guessing if you were to apply on June 30th, you wouldn't get your money until sometime in July. So if that applies to you, just know that your covered period can't go beyond 12/31/20. This FTE reduction safe harbor in the original application basically is kind of a math thing. So if you had a 10% reduction in FTEs, you'll get a 10% reduction in forgiveness. The Flexibility Act added this new safe harbor that I just mentioned, and we're, like I said, waiting for the revised application to see how that's going to work. So that's out there. Another thing I wanted to mention is on Friday, you know, I keep saying, it seems like every time I do a webinar on Friday and I talk about what I know, then the SBA releases something on Friday night that changes everything I know. So I was fully expecting that this last Friday, and unfortunately, actually, that didn't happen. But they did come out with an interim final rule on Friday night. And the gist of that rule is that they reduced the time frame that a convicted felon has to wait, or I should just read it to you from my phone, but essentially in the original program, in the original application, for a convicted felon, it had to be 5 years from their conviction before they could apply. And on Friday, they released this IFR that says it reduces the exclusion period, preventing convicted felons from accessing PPP funds from 5 to 3. And so it's funny is I told you I listened to the Senate hearing on Wednesday. That was a hot topic. There was a couple of senators that were like, we really got to reduce this period. These are the people we want to help. They're convicted felons, but they've turned their life around. They're trying to help. They're starting a business and being productive members of society. We need to reduce this period. So on Friday, they reduced it from 5 to 3. So anyone who was, cut out of the program before might be able to apply for a loan now in these last 2 weeks based on that reduction. Now, they did say if the conviction was for fraud, let's see, I think it still stays 5 years if you were convicted of fraud, bribery, embezzlement, or a false statement. Doesn't say exactly here, but I think they're distinguishing between felons who are convicted of something that wasn't a financial crime. So anyway, if that applies to you, that's something you want to look into today. If you were excluded before, you might not be excluded now. So just a kind of an overall quick summary of the forgiveness reductions that are out there right now. So on the application, you get down and you calculate what your forgiveness is, and it's either, the maximum is of course the loan amount. There's another maximum that is whatever you spent on payroll divided by 60% now. But then once you get down to what that final number is, you also have to now, according to the restrictions, you have to reduce it by your EIDL grant. And so many of you applied for this. If you remember at the very beginning, you could go onto the SBA website and apply for an EIDL grant. And it was $1,000 per employee up to $10,000. And so if you received one of those, based on what we're reading, you'd have to reduce your forgiveness by the amount of that EIDL grant, which is kind of strange. We're not talking about an EIDL loan. I know many of you have started to get finally the actual EIDL loan application, Because remember, you filled out the EIDL application. They gave you this short-term, this grant up to 10,000, and then they said we'd process your application and maybe you'll get more of an EIDL loan later. And those emails have finally started to come out over the past 2 weeks. So we're not talking about that EIDL loan is going to reduce your forgiveness that you might be in the process of right now. Just the grant that you received at the front end back in April, early to mid-April, maybe even May for some of you. Okay, so that is kind of a quick overview of anything, quote, new that we know. Unfortunately, it's a short list because the SBA has not come out with guidance yet. So I'm gonna hop over to Kristen and we're gonna roll into a Q&A. And so we're gonna kind of spend the rest of the time this morning going over the questions that you're posting in the question panel.
Thanks, Carrie Ann. You guys have lots of questions. All right, hopefully we can get to all these. Really good questions. A lot of them we don't have answers for because there are no answers yet. But I want to make sure we start getting through them. Okay, so the first question is, besides the PPP loan, is there a deadline for applying for the EIDL loan? And the answer to that is, as of right now, the EIDL program is only accepting applications for agriculture. If you are in the agriculture business, otherwise they are not currently accepting any additional applications. I haven't heard of any plans to expand that. I don't know if you have, Carrie Ann.
No.
Yeah. Okay. All right. Okay. Let's see. Do you have to let the loan company know what you are choosing? So I'm assuming that this is relating to your coverage period if you want to elect the 24 weeks or the 8 weeks. And all of that will be done in the forgiveness application, which we are expecting to be updated. Okay. So another question is, do you have to wait the full 24-week period to go through the forgiveness application, or can you do it somewhere in the middle? I believe a lot of people will use the funds before the 24-week period expires. So there is not an updated forgiveness application that reflects the new guidance, but you can fill it out early to answer that question. All right. One question is, someone asked, so is it only the Social Security part of FICA, not Medicare? And that's right, it's the employer portion of Social Security that is allowed to be deferred. And that's a new provision in the latest Flexibility Act. Okay. Carrie Ann, did you want to, there's one question here about the new rules. Do these new rules apply only to new loans generated after the enactment of the Payroll Protection Flexibility Act, or also to loans generated prior to the Flexibility Act?
So they apply to all loans. It's just that some of the provisions are optional and some of the provisions are specific. So like the 24 weeks. So any new loan that was received after June 5th, you have to use the 24-week rules. If you had a loan before that, you can choose between the 8 and the 24. And then on the loan maturity, any loan issued after June 5th is going to automatically have the 5-year amortization period for any amount that's not forgiven that turns into a loan. Of whereas an existing loan does not automatically get 5 years. It's still 2. But like I said, you can negotiate with your lender to see if they'll extend you beyond 2.
All right. Okay. The next question is there any indication at this point that the 8-week period will be modified to 24 over 52 for payroll calcs? And if so, how will this impact shareholders? And we don't know yet.
Seems logical, right? I mean, it seems
Yeah.
logical that everywhere they say 8 out of 52 is now going to change to 24 out of 52. And if that happens, almost, I mean, a lot of companies are going to be able to spend the money, get the forgiveness in like 10, 12 weeks. So that's the expectation, but we're also waiting, just like you, to know what that answer is going to be.
Yes, there's a lot of speculation from lots of different people following this program.
Right.
All right. Okay. Have you heard anything about applying for additional funding from PPP if you already received a loan? It's my understanding that unless there was an error with respect to your application, that if your bank did not fund the proper amount that you applied for, that there isn't an opportunity to go and get another PPP loan.
Right. And I'll add to that. So, you know, there's 123 billion left in round 2. And so in that Senate hearing on Wednesday, as you can imagine, every senator had an opinion on what they think should be done with the leftover 123. Because they're thinking realistically, it's probably not all going to be administered in these last 2 weeks. There's been a huge slowdown in applications, and so they're expecting some to be left over. So they all have their own opinion as to what it should be used for. One of the senators said we really like certain industries maybe to come back and get a second loan, like retail, restaurant, hospitality, industries where they're literally not open yet or they're just starting to open. One of the other senators wants the money to be used somehow to address businesses who've been hit with the rioting. So if a business was destroyed or they lost inventory or had damage, whatever, from all of the rioting that's happening, he would like the money to go towards that. So that's all just talk, of course, at this point. But what I will say is, you know, that the whole convicted felon thing was just talk on a Wednesday, and it was an IFR by Friday. So you never know how that's going to shake out. There is one scenario where you can go back and get more money. If you recall, there's a lot of confusion during the application process and everyone not really understanding exactly how the rules worked for owners and who could get included or whatever. So they did issue an interim final rule a few weeks ago that said, if based on your understanding of the program now, you would have filled out your application differently and it would have entitled you to more money, you can go back for a second dip. But some of the lenders have been, you know, some of the lenders are kind of over it. They're kind of past the application process, and a lot of the large lenders have maxed out, the large name banks. So even if you went back, they may not even have capacity to help you because they've maxed out their lending capability under the program. So if you're in that situation and you feel like you could fill out the application again now that you know the rules and get more money, you can do it, but you're probably going to have to really search around for a lender who's really willing to work with you and still has capacity to be able to even issue a PPP loan.
All right, next question. Okay. Can you explain how to use the EIDL funds? How does it overlap with the PPP if you've received both? And the EIDL funds have a wider range of the ability to spend than the PPP funds. You cannot use them for the same thing. That seems obvious. And so there are certain things that you can't use the EIDL funds on, and you can find those when you sign your application. But certain things like lobbying, refinancing long-term debt, things of that nature are not permitted under the EIDL program. But as long as you're not trying to utilize those funds for the same purpose, that is, then I would say, then you can use them for whatever, as long as it's within the context of the rules. Okay. If the EIDL advance is not spent on forgivable PPP items, does it still need to be subtracted? And yes, as the program reads right now, yes.
Kristen, there's another one that ties into that, and it's it says, I received my PPP. I also applied for an EIDL and the grant. I did not get the grant, but did just receive an EIDL loan. Do I get any grant forgiveness for the EIDL? Why didn't I receive the grant?
So it's my understanding that when you complete the application on the SBA website for the EIDL program, you can check a box that said that you were interested in receiving an advance. Carrie Ann, is that your understanding as well?
I don't remember, but probably.
And it's possible that you did not check that box, or they also ask how many employees you have on the application. If you indicated that you had no employees, it's possible that is another reason why you may have not received the funds. Yeah,
I understand on that. I'd probably call back to the SBA, because that's the EIDL is through the SBA, and you have to call the customer service number for any answers.
That's right. Yep. You can get clarification. There wasn't a big opportunity to save things down once you completed that application, and it feels like those applications got completed 30 years ago. And so people don't really remember what they selected on the form. So yeah, you can go and call the help line, which if you can get a hold of someone, they are helpful. Great.
Okay, Kristen, I'm going to take a couple sole proprietor questions, if that's
Great.
okay.
Yeah,
Okay.
let's do it.
So the first one is, has the amount a sole proprietor can receive changed, or is it still based on the 2019 income? So we're not aware of any changes to the application program. And so the application for sole proprietors was based on your 2019 Schedule C. And when I say sole proprietor, I'm talking about someone who files a Schedule C with their 1040. On the SBA's website, you can look at a document, and it's called, I forget what it's called, SBA applicates, like application instructions, and it goes through the application math for every type of entity. So it goes through S Corps, C Corps, partnerships, sole proprietors, and not-for-profits. And in that document, it specifically says for a sole proprietor that it's based on your 2019 Schedule C. Now, what's interesting is that a lot of lenders let people use their 2018 Schedule C, or let them use a draft of their 2019 Schedule C to get a loan. But I would fully expect that when you go to apply for forgiveness, that you better have your final 2019 Schedule C in hand. So if you haven't filed, and I know a lot of people haven't filed yet because the deadline was moved to July 15th, I would encourage you to hurry up and get your stuff together and get that Schedule C finished so that you have the final document, because your forgiveness is going to be based on your 2019 Schedule C line 31. So make sure you have that out there. And then the second one about sole proprietors, let me scroll down to where that was. If you're a single member LLC dash sole proprietor, so single member LLC, you're probably filing on a Schedule C. Should you pay yourself in distributions or should you pay yourself a salary? Okay, so you should not pay yourself a salary because you're a sole proprietor. There's no requirement to pay yourself anything because forgiveness is merely a function of your Schedule C line 31. So I don't think you logistically have to actually pay yourself because when you do the math to figure out the owner compensation component for a sole proprietor on the application, it just says 2019 Schedule C line 31 times 8 divided by 52. And the same with partners. It's not the same question, but this is the same for partners. Their owner compensation component is based on their 2019 Schedule K1, line 14A, which is self-employment earnings, which is also reduced by your Section 179. And I know that's a really complicated answer, but if you haven't quite filed your 1065 for 2019, you could work a little magic because if you choose to either not take 179 or so you take bonus, or maybe you just take regular makers, which is 5-year, spread it out over 5-year depreciation. You could work with your CPA if you're a partnership and even an S or even a Schedule C. You can work with your depreciation number to try to increase the numbers that you're working with to increase your amount of forgiveness. So if you haven't filed those tax returns, there are still some tax planning items that you could do right now. Okay, I think that answers those both sole proprietor questions.
Great.
I have one on here. Carrie Ann says, I believe I heard Carrie Ann say 60% of what you spend on payroll can be forgiven. I thought it was that whatever you spent on payroll, up to 60% of your PPP loan proceeds can be forgiven. Can you touch on that again?
Okay, so there's basically the new Flexibility Act says if you spend at least 60% of your PPP loan on payroll costs, you're eligible for potentially maximum forgiveness, which would be the whole loan. So that says you could spend 60% on payroll, and then you could spend 40% on non-payroll costs, which is rent, interest, and utilities. But the way the math works is your maximum forgiveness is kind of a function of what you spend on payroll. And that really only comes into play if you're unable to spend the other 40% on non-payroll costs, which now that we're at 24 weeks, I don't think it matters for anyone. But that is kind of a weird distinction. So if you weren't able to spend it all for some reason, you would take your payroll cost divided by 0.6, and that would be the maximum amount of forgiveness. So hopefully, I know it's a lot of math, and that's really the challenging thing, is that it seems conceptually simple, this whole forgiveness thing, but the way the math works is not simple. And when they came out with the application, honestly, they made it really hard, which is unfortunate, because I think what the senators really want is forgiveness, and the Treasury Department says they want forgiveness. So hopefully when they come up with this new application with the 24 weeks, it'll pull away some of that math and make it a lot more simple, because right now it's pretty burdensome.
So Carrie Ann, there's another question that ties to the application piece. It says, where do we acquire forgiveness applications? Does it come from the lender?
Yes, so a lot of you that have received a PPP loan have probably started to receive emails from your lender. I know that because a lot of the clients that I'm consulting with have started forwarding me the emails saying, oh, hey, I just want to let you know my lender is saying. So you have to apply for forgiveness with your lender. And so each lender is going to have their own forgiveness process, right? If we think back to the application process, every lender had their own way to apply for a loan. You logged into their portal, or for some, you went down and I think actually filled it out by hand and signed it. So depending on your lender is going to determine how the forgiveness process works, but you have to go through them, and then they're going to give it a cursory review. We'll call it a sniff test, and make sure that you filled out the application, you didn't leave anything blank, that all the documentation that you submitted with the application matches, right? So If you're claiming 60,000 in payroll costs, you gave them payroll registers that support 60,000 in payroll costs. So once they give it that kind of cursory sniff test, then they're going to send it on to the SBA for final approval.
All right. Robert, what's our time here? Can we just keep going, or?
Yeah, we got plenty of time, so let's keep going. We got a good 10 more
Great.
minutes. We can answer a lot more of these questions.
All right, great. All right, is there an Excel spreadsheet calculator for the new forgiveness form like the old one? There's not one yet that is available, but I would expect that one will be coming out. They did mention that they are going to make this process much easier, and what was it, a 15-minute online assessment that you should be able to determine how much you'll be forgiven for. Sounds like a big promise, so we'll just see what happens. But I do anticipate either way that the tools that have been available to date will be available once we get more information and get the application updated.
There's a good question in here. It's is the $100,000 wage limit to be applied for wages only for owners of corporations, or does it apply to all employees?
All employees. And the application, the way it's structured now, which is part of what makes it challenging, is that it wants you to segregate your payroll data into three components. The first component is owners. And so they want the owner compensation on a separate line. And owners hasn't been defined. So, you know, on the original application process, if you remember, owners really only included anyone who owned more than 20%. They haven't clarified what owners means for the application process. So owners, I think, just means owners. So if you have a 1% ownership interest, I think you could be considered an owner. So back to a more generic definition of owner. The second group of people they want you to lump payroll data together for is anyone who made over $100,000 in 2019. So you have to take you have to figure out who made over $100,000 in 2019. And then you have to gather all the payroll and FTE data for those people in one group and report it separately on the Schedule A. And then the last group is everyone else, right? Everyone who didn't make $100,000 in 2019, didn't work for you in 2019, all of those things, they go in their own category. So, but that $100,000 compensation limit applies to people in every single bucket. It applies to the owners, it applies to the people made $100,000 last year, and it applies to everyone else in the third bucket. So the way it stands now, the most compensation you can include for forgiveness, and we're talking about gross wages here, for any particular individual employee is $15,385. Now our expectation is that will go up now that we're on a 24-week system, but we don't know for sure how they're going to apply that.
All right. Does loan interest on, oops, I just lost it. But loan interest on equipment count as mortgage interest? And it's, no. Carrie Ann, I did read something about interest on equipment, and I'm trying to remember, but it didn't relate to mortgage.
Well, I think this is one of those questions where if you were to Google it, you'd get 50% that say yes and 50% that say no. But I think in the original CARES Act, it says any loan that is collateralized by personal or real property. So if you follow it strictly, then you would say yes, then equipment loans. Yeah.
That's right. Okay. All right. So someone said, so if there was an error, but you received a partial PPP, can you repay and apply for a new PPP from a different bank? I do not believe you can do that. I think you can only receive one, although it depends on the error. If it falls under the category that Carrie Ann discussed in terms of an error based on interpretation of the guidance changing, that would qualify, and yes, you would be able to. I'm not sure what that process looks like, if it's a payback and then a reapplication, but working with your bank on that.
I talked to the SBA about a similar situation like that a number of weeks ago. And it depends on how long ago you received your loan and then you're calling it an error. But if you just received it and it's wrong and you don't want to deal with that bank anymore, you have to get them to, you have to pay them back and they have to cancel the application in the SBA system. And they have to,
Got it.
so it's not, you're not repaying the loan and they're just gonna say, okay, the loan was repaid, because then it will show that you received a PPP and you repaid it. So it actually has to be canceled in the SBA system, and then that will allow you to reapply for, it'll allow your EIN or your social security number to be able to get another PPP loan in the SBA system. It's a kind of a complicated situation, and so you have to navigate it carefully, especially now with the little bit of time left of the program. You wouldn't want to try to cancel it and then it just take too long and then you actually miss out on getting a loan. So it can be done, but it's very complicated. I saw another question I think we can clarify. It says, can you spend 100% on payroll if the landlord is providing rent deferment?
Yes.
Yes.
And if you think about it realistically, there's a lot of businesses who, under the 24-week system, can easily spend 100% on payroll and not even have to mess with documenting, trying to spend it on rent, utilities, and interest. So, you know, depending on the structure of how the 24-week application works, if you're trying to make your life simple, you might just go with that. Say, oh, here's, 20 weeks of payroll registers, boom, it's all spent on payroll, and move on. There's 3 other questions that are kind of related, kind of short questions. I think that's really, if you thought you could spend more than 60% on payroll, you can always spend more. The 60% is just a minimum. So you can, like we just said, you can spend 100% on payroll. Can you clarify that part of forgiveness on payroll is extended to 8 weeks? I think the answer is extended to 24 weeks. And our understanding is that applies to all costs, payroll and non-payroll costs. You have 24 weeks to meet the requirements instead of 8. And then the last question is, if you choose 24 weeks, is the new math, instead of 8 divided by 52, is it 24 divided by 52? And Kristen and I both think that logically the answer to that is yes. But until we see the revised SBA application, we won't either one of us won't definitively give you an answer.
All right, here's another question. 1099 contractors are still not included in the payroll calculation, correct? That's correct. Also, if you receive your funding, if you use the funds to pay a 1099 contractor, you cannot count that towards the 60% payroll for forgiveness. And that is correct. You can use 1099 contractors for the EIDL loan. You can use those funds to spend on 1099 contractors, but you are correct. Nothing has allowed the independent contractor costs to be covered under the PPP program. All right.
Okay, I've had this question from a client. It says, if a rental on equipment is week to week, but it's being used prior to February 15th and then used later during the covered period, would this count as an existing rent for forgiveness? So this is really common with a contractor, right? So maybe you go to the equipment rental place and you just need a backhoe for a week, or maybe you need a backhoe for 27 weeks or whatever. And so you kind of have this informal arrangement, right, with the rental company where you just go and get the equipment you need. There's really no guidance on that. But I think it's reasonable that if you let's say you got the backhoe on February 1st and you've been using the backhoe this whole time, as long as you can provide invoices that show that, you know, you can probably use that. But there's nothing that says that I'm 100% correct on that, because it really talks about having a lease agreement in place. But I also know that a lot of those type of equipment rental places, they don't have structured formal leases, right? Especially if you're a repeat customer. You just call up and say, hey, I need a skid steer or whatever, and they deliver it, or you go pick it up. So I would put this in the maybe column, knowing that now that we're at 24 weeks, you may not even need that, because you can include so much more payroll that maybe it doesn't matter.
I got one right here. It says, what is your guidance on how to treat retirement benefits in the payroll calculation?
All right. The retirement benefits that are included are the employer portion of contributions to employee retirement plans. So if you have a safe harbor 401k match from the employer, any employer match contributions related to the payroll periods covered under the PPP coverage period would be eligible. Carrie Ann, do you have any thoughts on discretionary employer contributions for retirement?
I do. And this is another one of those questions that if you Google the question, 50% of you are going to, 50% are going to give you one answer and 50% are going to give the other. So I think the question that a lot of people are asking is, okay, you know, I accrued my 2019, even in the match. There's a lot of companies that don't pay the match, the profit sharing, or the discretionary, any of that, until the due date of their tax return, right? So they accrue it during the year and then they don't fund it until they file their tax return, which, you know, this year maybe that's July 15th, maybe it's not even until September 15th. So they haven't funded their 2019 contribution. So I get asked this question almost every single day. Can I fund my 2019 with my PPP money? Or do I have to pre-fund my 2020 contribution? And if you're a third-party administrator, you know, pre-funding is just a hot mess for a lot of plans. And so our position has been, if you're going to fund your 2019 contribution, we don't think you can take 100% of it in your forgiveness application, because it just seems out of context with the whole rest of the application, right? If we're talking about the 8-week period and the way the application is written right now, there's a restriction on owners. What's the restriction? 850 seconds of their 2019 compensation, or 15,385, which is 850 seconds of 100,000. If you look at the restriction on 100,000 people, what's the restriction? It's restricted to 850 seconds of 100,000. If you look at the math in the application on the wage reduction calculation, you know, if you reduce employees' wages more than 25%, you get penalized on forgiveness. The math for that says, take this number, multiply it by 8, divided by 52. So there's this huge emphasis on payroll costs being limited to 8 weeks. So it seems out of the spirit of the program to just be able to take your whole 2019 contribution and include it in forgiveness. So what we've been saying is, if you're going to fund, go ahead and fund, but you should only include 850 seconds of the amount in your forgiveness to be consistent with the spirit of everything else. I'm glad, I mean, the one thing that's going to be the best answer of this whole 24-week thing is now maybe it doesn't matter. You know, you can get there with payroll, rent, and other things where there's an easy answer.
Carrie Ann and Kristen, we're coming close on time, so I want to thank you for your comments, answering the question and answer. And I wanted to give you each a few seconds to, you know, share your final closing thoughts on the topic.
Kristen, you want to go first?
Sure. I guess we I'm happy to answer any additional questions that you have. However, I think like most of us, we're going to wait and see on a lot of these things and be keeping a pulse on the SBA and some additional guidance. I know that there's a lot of great resources out there right now, but just making sure that you're getting the most current information and not always trusting Google. Go straight to the source.
I guess I would say that, try not to get frustrated with your CPA when they give you that answer. Because Kristen's not the only one giving that answer right now. That's the answer I'm giving also. This is all I've done pretty much with 90% of my time since March 27th. And, when it first came out, we were guessing about the application. And then we got past that process. And then for basically 2 months, we've been guessing about the forgiveness. And then we all guessed, and then they came out with the application, and we were sort of right, but we had to reformulate everything when the SBA application came out. And so I think what we've all learned from that process is to maybe just quit guessing and wait for the new forgiveness application to come out, because we have time, right? If you're going to use the 24 weeks, we've got time. If you finish your 8 weeks, you still have so much more time at this point. So the 24 weeks has given us a little bit of a break to be able to wait and figure out what the answers really are, and then give our clients, really good guidance based on what the SBA actually wants.
All right, thank you, Carrie Ann. Thank you, Kristen. I included over in the chat bar the link to the SBA website for the PPP loans. So you can click on that link and it has all the information. If you like to read, there's lots of reading material on there, but it's a great resource for you to find out more information on the PPP loans. Again, thank you, Carrie Ann. Thank you, Kristen. We appreciate your time and efforts today, and we're glad you could share that with us. Just a reminder, we have our next session will be tomorrow at 9 a.m. And we thank all of you for attending, and have a great day.
Thank you.
Thank you.
Thanks.